All right, folks, let's talk about what's happening today. A lot of people scared, a lot of people frightened, people selling stocks. Ooh, scary tariffs, trade war. Well, you know what I'm doing? I'm laughing at this. I'm amused. I find it to be funny. It's pretty incredible to just sit back and observe behavior. And it's that same behavior over and over and over again. The behavior that people self-sabotage. It's really an incredible thing to watch. We saw it recently at the end of last year. We're seeing it again now. Let's go over what is going on. First, let me just say that last week I did send out an email to my subscribers saying that we should expect now a choppy period in the market. I was still bullish, but I said the rise would enter into a choppy phase, and I'll explain that in a moment. And then we had that new element emerge into the picture, and that was Trump's threat of new tariffs. He tweeted that out on Sunday night. That was a total surprise to me. I had no idea that was coming, as I'm sure most people had no idea that was coming, but whatever. He said that. That's Trump, and that threw everybody into a tizzy. Now, the reason I was expecting, now the rally, we went to new record highs, as I said we would. And then last week, or maybe it was the week before, I don't remember, but I sent out an email saying, expect now the market to enter a new phase, still probably going up, I said, but in a choppy fashion. There would be resistance to the rise. And the reason was we were now entering into a period where bank reserves would start building back up again. Remember, we had that in April, the big, gigantic drawdown in bank reserves because of tax collections. And as a matter of fact, reserves in the banking system are now at the lowest level in 7 years, since 2012, right? That we had a huge drawdown in April because of record tax collections. And now that money gets spent back out again. So in April, what happened with that big drawdown in bank reserves, the banks, they react to that. They replace the lost reserves with other non-risk assets like treasuries and agency securities and mortgage-backed securities, and even some equities, the equities that they're allowed to own under regulatory stipulations. That created the buying in the market. Also, they replaced the drawdown in reserves also with some risk assets like loans. You know, people look at that, economists look at that, market analysts say, hey, banks are lending more money. That must be good for the economy. We'll buy some stocks, all that stuff. Companies use loans for stock buybacks, all that. So it's bullish. So we saw that happen in April. We had the market rally to new highs. And now we're in this period for the next 6 weeks, probably till about mid-June, when the Treasury starts spending back out those tax balances that it collected in, and the reserves start building up in the banking system again. Now, it doesn't stop everything dead, but it slows down or maybe provides some drag or resistance to bank asset growth. Okay, so that means they'll be a little bit slower on their purchases of treasury and agency securities and mortgage-backed. They may slow down the rate of loan growth a little bit till they grow their earnings another quarter or whatever. So again, you see a reaction in that in the stock market. Analysts, economists, corporations say, oh, loan growth slowing down. Oh, maybe we should pull back some. You may see it in the data. So the market enters into this, I guess, slower rise. Could even be a correction. But then we see Trump come out on Sunday night and everybody panics. So within this already this environment of a little bit less bullish, I would say, for technical reasons, everybody's freaking out, everybody's panicking, everybody is selling, which is great. It's fantastic, because what that does creates another buying opportunity, because aside from those technical things that I talked about related to reserves, the fundamentals are strong. The principal fundamental, the thing that I follow, is the fiscal support, which is at record levels. Government spending at record levels. And that is the tide that floats all boats. Now, as far as the whole tariff situation is concerned, I explained that in my last email. And we are starting to see tangible consequences of that, positive consequences from that. I talked about it yesterday. In the year since Trump enacted the first tariffs, going back to early last year, to February, March, whenever it was, we have seen capacity use in the United States, industrial capacity utilization go up a full percentage point. Now, it's a long way from where it was in the 50s, the 60s, the 70s, but it's starting to go up, which is a good sign. That's what we needed to see, and that is happening. And I just saw an article today, as a matter of fact, that U.S. Steel is now going to increase its investment over $1 billion into one of its plants in Pennsylvania to modernize that plant. You're going to see that all over American industry, where that's already starting to happen. By the way, you know, the last year, capital investment, right? Non-residential fixed investment, that component of GDP, that has been rising at the fastest rate in 5 years. So these are the things we should see in response to the tariffs. And these are bullish things. These are supportive for the economy. Yes, we may have higher prices as a result of the tariffs. And yes, higher prices mean higher inflation. And yes, that is a drag on GDP. But it is also being offset by higher investment, higher wages, and ultimately a shrinking deficit, which means a smaller drag from net exports. Net exports is always negative, so that's a drag. So all that stuff is bullish. And China's going to be just fine. China runs a trade deficit with the rest of the world. It is a net consumer. It runs a surplus with the United States, but you got to look at the big picture. China is going to be fine, and it's going down that road. It understands what is happening. Its policy now is more domestic consumption and raising income and living standards, so it's going to be fine. So yeah, that's it. Everybody's panicking. Everybody is selling. I'm here like this. All right, give me your money. Go to my website, pitbulleconomics. If you want to be informed. Otherwise, you can continue to just guess or be scared at every little movement. I had a lot of people like that. They ran away. They get scared. Folks, this game is all about mental game. It's all about resilience. It's all about slogging through the tough times. It's like life itself. Every day is not butterflies and rainbows, okay? As a matter of fact, that happens very rarely. The reality of life is grit, it's grind, it's getting up every day, it's doing your thing even though you hate it. Or maybe you like it, but there's still grind involved. That's what trading is. I mean, if I had to boil it down into a very simple explanation, that's what it is. That's what it is. Very easy. Just have to control your emotions. Most people can't. They freak out. They look for the system fairy. Keep looking, everybody. Remember, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye.